Hello, folks. It is Wednesday morning. Markets are not open yet, equity markets anyway. We're going to do a quick market overview. Just got a few charts open this morning, highlights of what I'm seeing. Got some positive action in the precious metals. A little bit of bottoming action in gold. Actually looks better in silver, but we can see that price has done this sharp pullback and appears to be finding support at a level we would expect. It's this horizontal support and resistance zone. And like I said, it appears that price is finding support there. Got a bullish doji. That was Monday's price bar. Got a bullish doji there in the daily gold chart. And then also, whether it was Friday or Monday, we have bullish candlesticks in a number of the mining stocks as well. MACD, we can see the histogram is hinting at momentum turning back to the upside. Energy obviously very low. Nice thing, MACD is assuming that this is just a pullback and a pause before the next up leg. MACD has worked off this overbought. It was up here at this overbought level, same level as the last peak in MACD, but now we've worked that overbought level off. So anyway, positive indications, in my opinion, in the daily time frame for gold. Golden crossover, that's the highlight there. Silver in the weekly. So we got a nice up leg in silver, and now we're getting a sharp pullback. And so one of the ways of looking at charts, one of the methodologies for doing technical analysis is Elliott waves. And so if we were looking at this chart from an Elliott wave perspective, we could talk about there's wave one, this sharp pullback is wave two, and now we're expecting a wave three. What's typical in Elliott wave terms is that wave three will be at least as long as wave one, and quite possibly longer and it's a Fibonacci, like we'll get a 1.6, leg three will be 1.6 times leg one. Often in commodities, leg five is the longest leg. So, but anyway, that's one of the possibilities in this chart. If we get a 1-to-1 on this next on leg three, that would take us up to 28, the round number at 28, which coincident with the prior peaks and the upper median line extension of that shift pitchfork. So MACD still in bull mode, suggesting that primary trend is to the upside. Got lots of room before we become overbought in MACD. Energy very low, but appears to be turning upwards. Silver in the daily. So this is the some really nice action here in the daily chart. So this was Monday, where we got price pulled back all the way to the 200-day moving average, and then got a sharp bounce off of that level. Left us with this doji or bullish hammer. That you probably call that a bullish hammer. And when we're looking at doji candles, I always like to think of dojis as a battle. And so the buyers and the sellers, they went into this market, and they rolled up their sleeves and they duked it out, and the buyers won. So the sellers were able to push price all the way down to the 200-day moving average, and the buyers came in at that level and pushed price right back up. And so what we're left with is a bullish candle, bullish hammer in Japanese candles, term sticks. Very nice volume. So exactly what we'd like to see happen when we get some bullish price action. We want to see it backed up with volume, and that's exactly what we've got there. MACD again has worked off. We were way up here overbought. Now we're back oversold. we've certainly been more oversold than that, but we're pretty oversold, ready for a rally, and histogram is hinting that momentum's turning back up, energy turning up as well, golden cross. So anyway, nice action in silver. That was really, this is really the chart that motivated me to do this video. That this is some, in my opinion, this is some nice bottoming action in silver. Makes me suspect that all we've had here in the precious metals is a sharp correction of this rally out of, that was August, September of 22, sharp pullback, and I'm assuming that we're approaching the resumption of the uptrend. We're going to get the next trend higher. Mining stocks, they weren't happy yesterday, but notice that we're testing, or price in GDXJ is testing the 200-day moving average for support. Also, this lower median line extension of this modified shift pitchfork. So, two levels of potential support there. Yeah, it doesn't look like we don't really have any horizontal. I was looking for a horizontal support resistance, not seeing one. Energy low, MACD back in bear mode on a sell signal. So mining stocks in general, as based on this proxy, this index, mining stocks not looking terrific. Some of the individual shares are looking nice. And like I said, we got some nice bullish candles in some of the majors Friday and Monday. So the dollar, this is in the weekly time frame. Just want to keep in mind that one of the headwinds that we're dealing with in the precious metals is that we've got some strength in the U.S. dollar in the last couple of weeks. We had this extended downtrend, and now we're getting a pullback or a correction. Let's throw a fib retracement on there and see what it looks like. So 38% is way up there at the 40-week moving average. So that would be a potential target. MACD is oversold in bear mode, but the histogram is certainly hinting that momentum is turning back to the upside. Energy is rising. So potentially the start of an uptrend in the dollar for a while. Here's the dollar in the daily time frame, and we can see that extended downtrend, and now we're getting some kind of bounce. We'll see if it's a prolonged, do we get all the way back up to the 200-day moving average? We got, that's a pretty strong support resistance zone right there. Have to get through that first. So, but could do it. So MACD's in bull mode on a buy signal. Got lots of room to run before it becomes overbought. So dollar could push all the way up to its 200-day moving average, just as a possibility. This is one starting to say this is one of my favorite charts, but only a favorite chart from a shock and awe perspective. Our financial markets shouldn't make charts that look like this. This is not a good thing, and the key for me in this chart is noticing that in the current month, we're starting out 2023, and it appears that we're breaking out higher, that interest rates are going to continue pushing higher. And of course, that is my expectation, is that the major central banks are going to continue raising interest rates, not because they want to, but because they have to. They're trying to keep things from falling apart in the background, and nobody wants to buy bonds. And so the way you attract buyers, yeah. anyway, so they have to raise interest rates to attract buyers. Because foreign buyers aren't buying, well, basically aren't buying anybody. Nobody's buying anybody's bonds right now. There's a lot of financial risk, uncertainty in the world, and so certainly the major buyers, the major foreign buyers of U.S. government debt have backed away from the markets and selling selling their inventory of U.S. debt as well. Saw an article just this morning that China's 12 at a 12-year low, I think, was the headline for U.S. Treasury holdings. So anyway, there's a liquidation of U.S. debt going on, and they're not accumulating it anymore. So with a lack of buyers in the debt markets, they have to raise interest rates to try to attract money to the bonds. And anyway, the natural trend in interest rates is higher, and I believe it will be higher for longer than most people are expecting. So anyway, equity markets, they weren't happy yesterday. I haven't really scanned the news and wasn't watching the equity markets yesterday. So obviously they weren't happy. And looking at this chart, I noticed we could talk about this being an island in this yellow highlight. We kind of gapped into it, and now yesterday we gapped out of that level. And so, it's kind of sloppy. I'm not sure that we'd really want to talk about that being an island, but it's certainly suggestive of that. So anyway, all of the equity markets lost 2% or more yesterday. Here in the S&P 500, MACD was overbought, and so it appears we're rolling over, try to work off some of that overbought level. Energy very low. We've got potential support at both the 50 and 200-day moving averages. So we've got what could be strong support below, but that was not pretty action yesterday. Certainly, similar in the Dow, just unable to push up through this resistance zone. MACD has rolled over, energy very low. And then the island formation, it's a little bit cleaner here in the NASDAQ. You can see here we gapped in, definitely gapped into that area, and now yesterday gapped out. So anyway, could look at these formations as island reversals, which obviously not a positive thing. That's it for the charts this morning, and I will talk to you soon.